today. Wiping out the last 3 weeks of, I suppose, movements. We're at a 3-week low, biggest fall, I think, since December last year, and it was very much a high beta sell-off.
We have seen a big fall, and a big fall combined with quite large volumes in relation to what we've come to expect. So a fall of 2.2%, volumes of $5 billion being traded. It's not a good signal for the Australian share market. Last Thursday we were talking about that uptrend being in place, but the day after we were talking about that, if we have a look at the 30-day graph, you can see that uptrend in place was broken on Friday, which was the first signal, and today, of course, that absolute slide on the elections that we saw over Europe. An absolute bloodbath on the Australian market today. If I just bring up a market map, and usually anything gaining is in green and anything losing is in red, and you can see it's been red across the board. If we have a look at the top 100 stocks on the Aussie share market, just 2 stocks out of the top 100 managed gains today. That was Dexus as well as Ramsay Healthcare. And the materials sector, some massive losses. BHP, Rio, Fortescue, the top 3 stocks in that sector were accountable for a quarter of the fall that we saw on the Aussie share market. We saw all 3 stocks losing more than 4% in one session, and Fortescue actually losing 6%. The energy sector, we saw some sharp losses there. Oil prices trading at the lowest of the year so far, and really it was a run into safe haven plays. We saw the gold ETF gaining 1.5%. And the high-yielding areas doing well. Cabcharge gained 4%. It has a historical yield of 5.8%. And we also saw Telecom Corporation rising by 0.8%. That's got a yield of 5.6%. So there weren't many winners on the market, but those winners usually driven by investors seeking those high-yield and safe haven areas.
Difficult always to forecast, Julia, but I mean, do you see Europe in these issues? And of course, the non-farms very much overshadowed, but again, another sort of negative indicator, if you like. Do you see this remaining in place and dominating trade for the short term?
I think Europe has always been in the back of investors' mind, but now it's moved to the forefront of investors' minds. As the other 2 panel experts have been saying today, Greece was there was always a probability that it was going to leave the euro. So the market had been pricing in probably around about a 50% chance that we would see Greece leaving the euro, but I think that's now shifted and it's pricing in more of a 70% chance that we are going to see Greece leaving the euro. So Greece, the big shock of the weekend. While we did see the French elections quite dramatic, and we've got a new French president there, Francois Hollande, and he's going to be really fighting to knock back some of those austerity measures and instead refocus on growth. But I think Greece was a real shock over the weekend for risk assets, and we saw that dramatically being reflected in the Aussie dollar, the euro, in fact, risk assets across the board.
Yeah, on the Aussie dollar, Julia, big plummet in that, particularly against the greenback, against most currencies, except, non-surprisingly, I suppose, the euro. Where to from here? I mean, speaking to Peter Escher a little earlier today, he thought we could potentially see breaking of parity against the greenback.
And that's going to be the real test this week, whether the Australian market manages, the Australian dollar manages to stay above parity, or we do see a break above that parity, signalling further weakness in the Aussie dollar. So parity is going to be the test for the Aussie dollar. We have a look at the Aussie dollar, though, a little bit of divergence from the performance of the Australian share market, especially in the afternoon. The Aussie dollar saw some sharp falls very early on in the session, but you can see that after 2 p.m. we actually saw the Aussie dollar recovering some of the ground it lost. So we had seen the Aussie dollar travelling at the lowest of the year earlier on in the session, but we did see a slight recovery towards the afternoon, unlike the Australian share market, which was sold off much more heavily towards the close. And I guess part of that was some of the good domestic data that we saw in terms of retail sales, building approvals, although the ANZ job ads saw a fall of 3.1% month on month, and we saw the NAB business conditions also deteriorating. So the Aussie dollar not doing too well today, but a bit of a recovery in the afternoon, and as you mentioned, James, the real test at parity this week.
That to happen and maybe lend some sort of support to this falling market, people coming in looking for bargains?
If we have a look at the market, the problem is when we see problems like the European debt crisis, well, both investors and traders have a lot of experience in dealing with risk-off environments now. It's almost a sense of deja vu. And I guess the problem is it's a little bit like catching a falling knife. So I think even the stock pickers will wait until we do see some sort of base and a turn in the tide and in the trend before jumping back in again, just because we've seen what's happened in the past a number of times. I guess domestically, though, though, things are looking brighter. We are seeing interest rates falling, the Aussie dollar also falling. So those two things were significant headwinds for a lot of companies on the Australian share market. But at the forefront is the European situation. Once that melts away, then we will be focusing once again on domestic earnings. So I guess for any investor that can keep their heads during this time, it is an opportunity. But I guess just waiting for that base to form and the market to start trending back up before getting too excited.
And just a final word on that, Mark.